Hello, hello, hello. Welcome to today's live. My name is Lunta Di La Paulo, and I am excited to be hosting you because we have an amazing subject, an amazing topic that I believe that is gonna be so valuable to you as a taxpayer, especially around this time of the year, right? We are gearing up towards the tax season. It's just less than about 1 or 2 weeks before the tax season begins. And every single piece of detail that can help you save money on taxes, avoid headaches, or any other financial hardship, we want to give you that information so that you can make better financial decisions. You can avoid getting into trouble with the IRS or your state tax authorities. And that's what we're here for, okay? And today we're going to be talking about the ins and outs of tax strategies and compliance for your LLC, okay? Your LLC. So I have an immense pleasure to be here today. Again, my name is Lunta Di La Paulo. I'm a CPA and founder of Yetu Accounting and Tax PLLC, and we operate across the US. We serve business owners, taxpayers across the nation, helping them minimize their tax burden, optimize their cash flow, improve their profitability, and more recently, we have been helping business owners preparing their businesses and themselves for a potential exit. So if you're a business owner and you need help along the lines of these items, uh, give us a call, send us an email, and we're gonna be here to help you. But with no further ado, I'm gonna go ahead and share my screen so that we can dive into the ins and outs of tax strategies and compliance for your LLC. So here's what we have for you today, and I have broken down this presentation essentially into three pieces, okay? Into three pieces, right? We're gonna begin with the general consideration, what applies generally for limited liability companies, right? In terms of their formation, their operations, how they stay compliant, okay? What do you need to have in place to be successful tax wise, accounting wise, and operational wise? Okay. So we're going to be talking about that just in general. Okay. If you own an LLC or you are self employed individual or even a sole proprietor individual without an incorporated entity, this life is absolutely for you. Okay. So we're gonna be looking into that, the general consideration. We're gonna address single member LLCs, and then we're gonna talk about the multi-member LLCs. Then we're gonna wrap things up so that we can give you a little bit of time to ask for questions. So let's begin with the general considerations, okay? So how do you form an LLC? Let's start there, right? You have an idea, you have, you know, you want to start a business. Some people will tell you you don't have to incorporate, they are right. Other people will tell you you have to incorporate, they're also right. It depends on many factors that we're not going to be going into these details right now. But here's typically what people do when they want to form their LLC. Okay. They file the article of organization with their state where they live. Okay. So we are based in Illinois. When we formed our company, we file our articles of organizations with the Secretary of State of Illinois. Okay. So depending on where you are, maybe South Carolina, Texas, California, to form your LLC, you'll need to file with your specific state. It's not governed at the federal level, rather, it's at the state level. Okay. So let's get that out of the way. The second thing that often have to be considered is in terms of whether I have a single member LLC or a multi-member LLC. And this is going to be important as we will go through the conversation. If I own 100% of the LLC, I have a single member LLC, one person only LLC. If I'm starting a firm with friends, relative, or even family, and they will also be part owners of the LLC, then in that situation we have multi-member LLC. Okay, and each one of these will have different tax ramifications sometimes. Okay, and we're gonna be covering them as we move forward. Now, here's one important item that all of us need to keep in mind. Okay. If you are launching a multi member LLC, you absolutely need to make sure that you have an operating agreement. What is an operating agreement? An operating agreement is a document that lays down, okay, what the terms of your partnership are gonna look like. Okay, you can talk about how members are added or removed from the LLC, what happens when somebody dies in the LLC, how profits are distributed, or how losses are shared across or between or among members of the LLC. You can talk about capital commitments, capital distribution, and so forth, and many other issues. It can be a simple or a very complex document depending on who's involved and what the limited liability company is being set up to achieve. Okay, very important. Here's one small detail, a small detail though. An operating agreement doesn't have to be in writing. It can be an oral agreement that is binding in all the members. However, we live in a world today that unfortunately not everybody remembers what they said. So it's very important for you as a potential business owner or a business owner, a taxpayer, to actually have things written down. You have to put it in writing. If you don't put it in writing, things get a little bit complicated very quickly. So that's tip number one that I wanted to share with you. So let's look into some additional details around what can help you be successful and compliant with your LLC. Certainly, when you need to form your LLC, you need to choose a name, and that name have to end with LLC or L.L.C, limited liability company, that clearly identifies that you are a limited liability company. If after you register your business and it's approved and you're not using those letters, it could actually put in cause, okay, could actually jeopardize your limited liability protection. And as we will see, the reason people form limited liability companies is because they need to have protection between their personal assets versus the company's assets, okay? In case they get sued. So, very important to keep in mind, very important to remember. The second thing, you need to have a registered agent and address. For many people, it's typically themselves. Other people outsource that service to have a different address other than their own home address. Okay. You need to have a designated person who manages the entity. And again, it can be yourself or it can be somebody that you appoint as your agent to manage the entity. It's important to also have accurate documentation, especially around the incorporation or the organization of your LLC. And this is the place that many business owners fail because they are not keeping track of the annual meetings, the resolutions, the uh, the proper documentation effectively around what they are doing, the decisions they're making in the company. And as a result, as a consequence, when there is a lawsuit, there isn't really an easy way to establish that the LLC exists outside of their own lives. And consequently, excuse me, and consequently, it doesn't look favorable to them. It doesn't look favorable to them. So, if you're a business owner, one thing you can do yourself a favor is to always document your decision. We are forming this LLC. We've met among future owners as the promoters of this LLC or hire an attorney to help you, right? In the date X, we decided to name the future LLC limited the future LLC YZ LLC to operate in the state of X to pursue this and that business ventures. Okay, dated and signed, and everybody are gonna be signing. Okay, those are just the basics. Those are just the basics. And of course, as you know, you need to have your EIN. You apply for that with the IRS, and then you set up a separate bank account. Again, this is very important for compliance purposes. And often, when we meet with business owners, we want to make sure that anything they've paid for the organization of the LLC, once they set up the business account and make their contribution into that business account, they have to pay themselves to reimburse for any expenses they have incurred up to date. Okay, that's very important because those are some of the startup and organizational expenses that are tax deductible, and a lot of people miss out in this space. So just to do a quick reminder here, we're covering the LLC formation. And these applies, what we've shared so far applies both to single member LLC and the multi-member LLCs. Okay. So that separate account is very important. It's one of the things you need to do to establish a separation between you and the entity. Okay. So that's number one. The other item that we need to address are some of the characteristics of limited liability companies. And I want to stress two things in particular. Number one is the fact that the members or the owners, right? Owners of LLCs are called members. They're not shareholders, as incorrectly I hear other people say out there, right? Using the right terminologies is key and it's important. The second thing is about how LLCs are taxed. LLCs pass their profits and losses to the members. Again, the owners of the firm. Okay. And these owners or members report that income on the person at the personal level in their Form 1040 tax returns. Okay. And this is where LLCs and corporations differ because on one end, they both share limitation in liabilities. However, when it comes to taxation, corporations are taxed at the entity level if they distribute any dividends to the shareholders or any distribution in excess of their basis, they get taxed as well on the second level at the personal level. But LLCs are not taxed, in fact, but their income or losses passes to the owners who get taxed. Okay, I just want to make that point clear. And here's additional items that we need to make sure we understand and we capture. We need to understand that LLCs can be either member managed or manager managed. What's the difference between these two? Member managed LLCs are LLCs that the members or the owners are managing and operating and running the day to day operations of the LLC, or at least one of the member, right, who is managing. Therefore, have the capacity to make binding decisions on behalf of the LLC. However, for a manager managed LLC, members or owners of the LLCs cannot make binding decision that bind the LLC because they are not involved in the running of the limited liability company every single day. Okay? They cannot make those decisions. But that doesn't say that they cannot vote on matters of major implication for the entity. And that's where the voting strength comes in. Each member is generally or has generally the level of strength of voting strength proportional to the contribution of that member. So let's say we have a new LLC that is being set up, and the capital structure for that LLC is $100,000. Okay. If I contribute $10,000, therefore I have a 10% voting right into that entity. Okay. Unless the operating agreement establishes otherwise. Very important here. The second thing is around the profit and losses allocation. Again, if the operating agreement doesn't mention anything around how profit and losses are to be shared, therefore, by default, by default, the profit and losses are shared according to the voting strength or the ownership interest in the organization. And here's an interesting fact about LLCs. They tend to provide a large amount of flexibility to the owner of the entity. It allows the owners to even decide how profit and loss is shared, even when one of the owner did not contribute in proportion to the loss or profit it's been given to them. Okay, so that's a very important fact that needs to be brought up there. Once you have set up your limited liability company with the state, you need to set up your accounting system, your payroll if you're going to hire employees, your financial reporting system, your bookkeeping and record keeping system, your cash flow management system, internal control system. And you need to make sure that whatever system you are building uh, for your accounting in your company will be agile and flexible enough to accommodate your growth as your company evolves. So here are some of the things that you need to consider. Looking into the accounting software, that meets the needs of your organization. Setting up your chart of accounts in a correct manner to capture the economics of your business. Creating a paper trail or documentation system that facilitates retention of key information. All these items are very important to have created right at off the gate. The other important item around LLCs, whether it's single member or multi-member, is tax planning and tax preparation. When you set up your LLC, as we will see, depending on whether it's single or multi-member, there are gonna be different tax reporting approaches. Okay, we need to figure out what's the most efficient way to optimize your business for tax purposes. What approach, what tax mechanism we can leverage to effectively reduce the tax burden of the taxpayer in a legal and ethical manner, right? How are we expecting to have the distributions and contributions taxed or payroll taxes? And many other decisions will influence how we choose to be taxed as an LLC. So for that, you really need to get a good understanding of the tax implication, and we will be looking at some of some of them in a minute here. Um, and you need to have a full picture of the costs involved around each decision you make around tax minimization, tax mitigation. Okay, because if you go under the illusion of trying to save money on taxes and it's gonna cost you more than you are paying for, it might not be a good tax idea. Okay, so with that in mind, it's always important to look at the cost benefit analysis before implementing a course of action. And again, bookkeeping and record keeping is fundamental for you to actually leverage the power of tax planning. Okay, so with that in mind, we're gonna be moving into single member LLCs. We just covered the general considerations that applies to whether single member or multi-member LLCs. So let's look into how these are taxed. Generally, as we said, LLCs pass their income to the owners or members, and they therefore get taxed at their uh, tax level. Okay. However, we need to make an important observation here. LLCs create a scenario where, at the federal level, the income is taxed twice. One, we have the income tax, and two, we have the self-employment tax. Okay. But before I look at that, let me tell you what is not deductible, right? You have income minus expenses gives you business net income, right? And that's the income that gets taxed, both income, federal income tax, and then the self-employment tax into the owner's tax return. So here's what you cannot deduct. And I've seen so many times people making the mistake and claiming them incorrectly. Salary to the owner is not deductible for tax purposes. It's not an expense to the business. It's considered a withdrawal. Federal income tax that the owner is paying is not deductible for the business. Okay? Personal portion of auto, meal, travel, entertainment, not deductible. Interest expense, right? Especially mortgage, the interest for the mortgage is also not deductible. State and local taxes, not deductible. All of those, or many of those, go to your Schedule A if you're itemizing your deductions instead of claiming the standard deduction. Charitable contribution, again, not deductible for your business. I cannot tell you the number of times that I've seen business owners or self-employed individual claiming a range of these expenses on their tax returns. Bad debt expense is not deductible as well. Health insurance payments are not deductible. In fact, it is an adjustment to arrive to your AGI. So very important detail to pay attention there. So with that in mind, let's look into an example around how your self-employment taxes are calculated. Okay. So, but before we do that, let's look into what is actually the rules around self-employment taxes, right? For 2024, the total of self-employment taxes is 15.3%, right? When you're an employee of a firm, you pay half of that and your employer pays half of that. However, when you are your own employer and employee, you pay both, right? People like us, people like me and you, right? And that is applied to income up to $168,000. If you earn an income over 200,000, if you're single, or 250 if you're married filing jointly, there is an additional 0.9% Medicare tax is applied on that excess income. So let's go back, and that's not even, we're not even including the federal income taxes, or for some of us who live, or many of us in fact who live in states where there are income taxes, right? So we're gonna be looking here into an example. Okay, let me stop sharing my screen and share a separate screen here for us. Okay, I am going to add this screen now. Okay, I hope this is clear enough. Okay, so we have an example here of an individual who is single, and he has a single member LLC, and they generated $500,000 in revenue, 180,000 in expenses. Therefore, his net operating income is $320,000. Because he's self-employed, he's paying both the employer and the employee portion, right? However, in the tax return, there is an adjustment, right? A reduction on the amount of that self-employment taxes that you paid. The portion of the employee is deductible. So the self-employment tax calculated is $45,000. Now remember, there is an additional 0.5% when you earn in excess of 200,000 if you're single. Therefore, there is another $1,080, leading us to a total of $46,000 in taxes. I know things are ugly when you don't have the right operating structure. Okay. So after we've done that, we can also look into the federal income tax side. So because they had an income of 295,000, assuming they are eligible for QBI or qualified business income, there is that deduction. Then their taxable income for federal taxes is 39,000, giving us a total of taxes of $85,000 tax balance due. Okay? Certainly, for many of us, that's not a beautiful picture. That's not something we desire or we want. And of course, we want to find ways to reduce our tax bill legally, or legally rather. So here's where we can start helping our clients save money on taxes. But before that, let us just look into the Schedule C. As I said, if you're single member LLC, you report your income in the Schedule C or Schedule E if it's a rental property, or Schedule F if it's a farm. Okay, and this is how your Schedule C looks like. We also have links. If you go to the IRS website, you'll find the actual document. And here's one of the things that taxpayer needs to make sure they're doing correctly, so that they're not missing out key deduction, okay? Or out of fear, they deliberately choose not to claim certain deductions that they are rightfully entitled to, okay? So things like depreciation, you have to claim it, okay? Home office deduction, please do take advantage of that. We're not going to be digging into the details of these kind of deductions. If you want to set up a call with my team, we'll be more than happy to walk you through them and how you can leverage them to your business. Not claiming business credits and QBI, major problem. Or incorrectly calculating deductions and credit, or as I said, leaving out important deduction because the taxpayer is afraid that the IRS may simply audit them. That shouldn't be your concern. If you're doing things right and you're keeping paper trail, you shouldn't be afraid of a tax audit. Okay. And here's some of the opportunities you can use to actually reduce your tax burden, okay, legally. Number one, you can hire your spouse or hire your children who are under 18. And just by doing that, you can also employ several tax strategies. Things like if you hire your spouse, you can buy them a smartphone or other electronic and it's deductible to the business so that they can be using them inside the company. You need to contact them for business purposes. Therefore, why not having a cell phone that they can write off? You can also deduct trips that you take with your family as long as you can rearrange them to fit the IRS rules. And that's something we've done for many business owners, okay? Giving them the wonders, okay? The good, the amazing of both worlds, okay? You can rent your home office from your spouse so that you can reduce your income to reduce the self-employment taxes, okay? And you can make your home office as your primary office. That way you can leverage again things like auto. Every time you drive from your home to a potential client, it's auto deduction, okay? You can optimize fringe benefits for yourself and your loved ones, okay, especially if you hire your spouse or your children by giving them books, certain subscriptions under certain expense threshold. And who isn't paying for healthcare in America today? All of us. And if you can optimize your health insurance, okay, that could be an area of major tax benefit as well. So optimizing health insurance with a potential health reimbursement agreement. Anything that the health insurance that doesn't cover that you have to pay out of the pocket because you hire your spouse or children under 18, a lot of these becomes deductible. And we haven't even covered things like retirement, okay? That could also become a great place for you to actually leverage your LLC to benefit yourself and your family. Okay, so those are some of the strategies that I believe could help you and your family. Now, as the last part, as we start getting to the end of our presentation here, we're talking about multi-member LLCs. Largely all of the concept we covered from the general consideration to single member LLC in terms of compliance, tax strategies do apply for multi-member LLC. Now, here's how LLCs are taxed, okay? On multi-member LLCs, they report their income and losses in the Form 1065, US return of partnership income, and they pass their income or losses and other item in a schedule called K1 to each owner of the LLC. And there is a longer list of items that LLCs can pass to their owners. This is just a very comprehensive one. And again, the same non-deductible expenses do also apply here. Okay. However, there is one however uh, guaranteed payment to partners or members of an LLC is a deductible expense to the LLC. Okay, but salaries generally continue to be considered as a withdrawal. Now let's talk about active members versus non-active members. Active members are the members of the LLCs or owners of the LLC who are running the company, okay? But passive members don't run the company and therefore they can make decisions in the day-to-day of running of the company. And because of that, passive members, they don't pay self-employment taxes on their share of income, while active members pay both self-employment taxes and ordinary income taxes. Okay? And this is how a Form 1065 looks like and a Schedule K1 looks like. And of course, by going to the IRS website, you can find a lot of this detail. Now, there is one important item that if I left out would have been I consider malpractice. And that is one effective way to actually save money on taxes under an LLC is by making an S corporation election. Let me go back there to find it, okay, is by making an S corporation election when it's appropriate. And this is another thing that I see people giving bad advice to taxpayer. They say make an S election, and they don't tell people that S corp election costs money, costs you a tax and a business tax return that you have to file, costs you a payroll that you have to set up, and you have to determine reasonable compensation. Okay, there is a compliance cost that comes with an S corporation, but unfortunately people aren't necessarily receiving good advice and making decision out of incomplete information. So if you want help to figure out whether your business is in the right place to make an S corp election, don't hesitate to contact us. We are here available to help you, to support you with your business, with your family tax situation. And again, we are around the tax season. So here's our contact information. You can reach out directly to me at lcpaulo at yetuadvisory.com, or you can text our cell phone number at 773 937 1264, or you can book a call with us. The link is right down in this image. Okay, so again, it was a great pleasure connecting with you today, and I hope this conversation was helpful to you. Again, my name is Lunta Di La Paulo. I'm a CPA, and we serve business owners and taxpayers across the US. So I look forward to connecting with you soon. Have a wonderful rest of your day. Bye now.